Let's ask my next guest how the economic slowdown is affecting business expansion in Asia. We have Jeffrey Schwartz. He is the chairman and co-founder of Global Logistic Properties. They provide warehouse and other logistic services throughout Asia. Jeffrey, always a pleasure. Thanks so much for coming in.
Thank you, Pimm.
I know you've been traveling all around the world. Give us the perspective right now. What's happening in China, the big domestic growth story?
Well, Pimm, in China, 85% of our business is focused on domestic consumption. And domestic consumption, as you know, retail sales are growing 17% per annum. GDP growth is strong, 8.5% per year, but retail sales even stronger. Our largest customers are growing 30% a year. Our leasing velocity is actually up year to year 60%. We're leasing 2 million square feet a month. It's strong demand. The strongest area there is e-commerce, quite frankly.
All right, so you've got strong demand in Asia. Where's the capital coming from in order to build out all of these facilities?
Well, we took our company public last October in the Singapore Exchange, did the largest real estate IPO ever globally. So we're sitting with a very strong balance sheet, less than 22% leverage, $1.8 billion of cash on our balance sheet, and $500 million a year free cash flow. So we're self-funding this business and growing our business rapidly there.
All right, growing the business rapidly in China. What kinds of deals are you able to strike? Long-term leases with companies?
Well, yes, but not as long as you do in slower growing areas of the world, i.e. in the UK, companies will sign a 10, 15-year lease because they can predict growth, if there is growth. In China, if retail sales are growing 17% a year, the better companies are growing 25% a year, so they want to sign 3 to 5 year leases because you really can't plan that much further out at that kind of growth.
You planning to build some more logistics centers in China?
We're continuing to, we'll start over 18 million square feet of distribution facilities in 23 countries, just expanded to the interior of the country, Chongqing, Chengdu, fully leased there. It's strong demand there.
Fully leased and strong demand, and you're only dealing with 3 to 5 year leases. I mean, this must be nirvana for someone in your business.
It's pretty good.
All right, tell me about what's going on in Japan. That's also in Asia. Are we talking a domestic story there, rebuilding after the tsunami and earthquake?
Our business there is, again, focused on domestic consumption and really on Tokyo, Osaka, which are the two areas of Japan that continue to grow, continue to have positive population growth and GDP growth. And we were 98% leased, just shy of that. Right before the earthquake, we're 99% leased today. Our development pipeline is far more robust. Quite frankly, while the earthquake obviously was a horrible human tragedy, I was actually in Japan during the earthquake, which was disconcerting.
Where were you when that happened?
37th floor of the Hilton, or actually the Conrad, which is managed by Hilton, or run by Hilton, checking out.
And what was that like? What was that feeling like for you, and what happened that day?
The building started swaying 1.5 meters each direction.
1.5 meters?
People were crying, people were screaming. Quite frankly, I was amazed how resilient, how professional, how courteous people were at the Conrad. They took care of people. Got back to my office, we assessed damage. We only had $28 million of damage in a $6.5 billion portfolio, which was kind of a positive statement or proof statement of the quality of what we had built and what we were telling people, that they needed seismic-proof buildings, they needed high-quality logistics facilities, and the outdated, obsolete distribution model needed to change to what we were doing. And it's actually shown up in the numbers since then.
All right, so you got strength in Japan, strength in China. What other areas in Asia are you building
That's all we're doing today.
That's all, just those two. So what about inflation? I mean, is it costing more to do the same kinds of build-outs? Because if everybody sees the growth story, don't they all want a bigger piece of the pie?
Well, Pimm, in China today, we're the size of our 9 closest competitors combined. So we're using bulk buying to our advantage, cutting deals with steel contractors to buy in bulk, keeping our costs in line. Order of magnitude 5 years ago, it was about 1,450 RMB per square meter to build our buildings. The pure construction costs, forget about the land, everything else. Land has gone up about 50% in that time frame. But it was about $1,450. Today we're doing it for $1,600. So we've kept our costs well in line by bulk buying, which gives us competitive advantage.
Well, when you're the big player, you can afford to do those kinds of things.
Right.
I can't let you go without getting your perspective on what's going on here in the United States. Any economic growth, any desire to do logistics here right now?
Well, Pimm, from our perspective, the U.S. is, with 2 bouts of quantitative easing, potentially a third one, it's very expensive on the real estate side, with the fundamentals not there to support it. So we're concerned about it. I mean, we're rooting for the U.S. to come back because a good U.S. is good for everybody, but have some concerns.
All right, I've got to leave it there. I want to thank you very much, Jeff Schwartz. He's joining us as the Chief Executive, co-founder of Global Logistic Properties.